The market's about to pick winners and losers fast. I've got 3 stocks that I'm buying before the rally and 3 I'm selling because they're overvalued right now. In this video, I'll show you why each one is on my list and the exact trades that I'm placing. Before we jump in, be sure and smash that like button down below. It's the one thing I ask. It really helps out the channel, so thank you very much. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers. And check out the free options workshop in the link below. There's also a paid course if you want to level up your game. All right, guys, the first one on my list, it's a screaming buy right now, is Adobe. They by far have the best products in the video editing photo space. Adobe's strong subscription model provides consistent revenue growth, and recent product innovations are expanding its market share. Despite solid earnings growth and improving margins, the stock is trading at a discount to its historical valuation, presenting a value opportunity. Technically, Adobe has formed a base with support holding firms signaling potentially for a rally. Here's the trade I'm putting on right now. All right, guys, this is the Tasty Trade trading platform and brokerage. There's a link down below. Some benefits if you go through my link. This is my favorite for trading options, super intuitive, and it's great, so check it out. All right, so this is Adobe, and you can see I'm on the 10-year chart and monthly. So I've got the 200-day moving average in the red, 50-day in the green, 50 is above the 200, and this is, again, a long-term chart, 10-year and monthly. But you can see, and then the white is the Bollinger Bands, but you can see it's been trending up, and we're at the lower end of that range. I've drawn some trend lines here in the blue. So to me, perfect time to buy this stock. Look at the fundamentals of Adobe. This is what I like about the platform as well. You can see quarterly revenue, net income increasing, assets, liabilities, all in good shape. And being a software company, this is annual, and so super solid. Software company, look at that, 90% margins, unbelievable business. And you guys all know Adobe. You're probably using it for your work. Everybody has PDFs, but really the editors and the designers, there's nothing that's in comparison to Adobe. There's new companies like Fig AI coming out. They're good companies, but Adobe's just a monster with tremendous market share, and they can buy any competitors basically. So the trades that I've got on right now, I've already got 4 put credit spreads, and that's what I'm using. So I've got the 350, 340, and we're trading at 360 right now, and the 355, 345. So we will jump into that here real quick. I just wanted to show you on Yahoo Finance why I'm trading it. 360 is the current price. They've got a target of 454 down here. Look at the 52-week range, 330 to 557. So it was just up here at 557. Looks like back in December of 2024, so less than a year ago. So it's just down right now. So it's an awesome buy right now. Now, if you go to the right here, the analysis page, you can see they beat earnings. They beat earnings, top and bottom line, something like 12 times, 13 times in a row. So it's just a machine. It prints money. But you can see the earnings beat. You can see all the buy and strong buy ratings from the analyst. And here is the best. The growth estimates, 12%, solid 12% every single year. So solid growth. PE, if you go to the statistics, you can look at the PE, forward PE of 15, and PEG ratio, price to earnings to growth of 1. So super solid. One thing that I look at as well, let me see here, my valuations. Okay, here's Adobe. So I put in the current 12-month trailing, where was that? Sorry, guys. There we go. All right. So this is a calculator that I use. Comment, what do I want you to comment? Price projection calculator down below, and I will send you the link to this if you'd like to have it. But you just enter in the current 12-month trailing revenue, the net income as well, and the shares outstanding. And all those, if you go to the stats page, they're all right here. I got those numbers directly from this. 12-month trailing, 23.18 million. and the net income 6.96, and implied shares outstanding 423 million. And you can see that right here, 23.8, 6.96, 423, and what that comes, and then I put in the growth ratio, 12%, 20%, which they hit every time, and the stock price should be trading at 434, so similar, and then 521. So this is over the next 1 year, over the next 2 years, and over the next 3 years. So it's just a solid grower, and how I'm trading it. So if I were to put this trade on right now, I would open up the November, and then I'd probably go 350. So puts are on the right, and I'm going to do a put credit spread just like I'm doing now because it's such a high price stock at 360. So puts are on the right, so I would click right here on the sell, and then go to the 340 as protection and buy, and we can collect $3.40, and you can hit review and send and place that trade. Boom. And when the market opens Monday, I'll adjust it if needed and go ahead and place that trade. Next undervalued stock that I'm buying right now, screaming buy, AMD. They've got a 30% CAGR. They've got MI 350 that's out now, MI 400 coming out next year. So it's going to boom. They benefit from secular trends in AI, data centers, and gaming, driving robust revenue and net income growth. Its valuation remains attractive compared to its peers like NVIDIA, with strong fundamentals supporting upside. On the charts, AMD is breaking out from a consolidation pattern, suggesting momentum is building. All right, guys, the next one, AMD, you can see what I've got on right here. I've got 5 leaps options out in September of next year, so 355 days to expiration. And I've got 5 short calls at 165 and 170 against it. And you can see we're trading at 159 right now. And then I've also got a put credit spread, 160, 150. So I like the positions I have on right now. But again, what you would do is go out to September. I'd go right at the money, 155 for 33.75 versus paying $15,900 to control 100 shares. You're controlling it with 3,300. And then what you can do is you can go to November and then sell the calls against it. Look at these meaty premiums. You can go to 175 and the 36 delta and collect $7.20. That will pay this off in 5 months, under 5 months. Boom, 26.50. And you hit review and send and place the trade. I've got enough on in AMD right now, so I'm not going to place it. But let me just show you some of the numbers here. So AMD, the 1-year chart, they've got a 185 target on Yahoo Finance. It's at 159 right now. But you can see last 52 weeks, it was up at 186. My target for these guys is much higher. It's like 200. Actually, I'll show you what my valuation is. But if you go to statistics page, and we can look, and we can see forward PE 26. It was up at 47 before. PEG ratio 0.49. That's unbelievable because of their growth. Price to earnings to growth is unbelievable. Now, they missed earnings last time, so that's part of it. But the reason they missed was due to the MI 308 shipments. Trump and the administration put a hold on that, on shipments to China, but since opened that up. So that's going to hit this next quarter. And you can see, I mean, before that, that was a one-time deal. But look at all the strong buys and buy ratings, and earnings per share growth, consistent growth, 54% next year, 17% this year. Unbelievable right now. Let's look at my valuations for AMD. I got it right here, I believe. There we go. AMD, again, comment options calculator or price projection calculator down below, and I'll send you the link. But you put in those numbers that I just showed you on the prior one on Adobe, how to enter them, and you can see the different. Wow, this is not right. Let me look at that again. But they've or no, it may be 219, then 284, 370. What did we say it's trading at? 219, 220. Yeah, that's correct, because the stock price right now is 159, so much higher than where it is right now. So AMD is the next one. Let me know if you're trading that down below and what you're using. If you're just buying the stock outright, if you're doing a poor man's covered call, if you are doing a put spread, let me know. All right, guys, next one, screaming buy right now, Salesforce, CRM. Salesforce shows resilient revenue growth driven by expanding cloud adoption and their platform upgrades. The recent correction has pulled Salesforce's valuation below fair value, creating a buying opportunity. Technical indicators also show oversold conditions, making this ideal and an ideal entry point. So let's jump into it. All right, here's a 10-year chart on Salesforce, and you can see the 200-day moving average way trending up, 50-day in the green, and bottom end of the Bollinger Band. And you can see the trend lines in blue that I drew. You can see that solid trend up and at the bottom end of that trend. So love the chart set up right here. As far as fundamentals, Salesforce, super strong. Their revenue, net income on the income statement and then the balance sheet, unbelievable. The ratios, they're 77% gross profit, being a SaaS, a software as a solution company, and a recurring revenue model. It's unbelievable. CRM, I've got three put spreads on, and I've got a poor man's covered call as well. So I like all those trades. IVR is 18 right now, but going on the put spreads right now, I would still probably go out to that 355. I would go right here. It's 39.70 versus paying 24 grand. You're paying less than 4 grand, and we can collect. Look at how we can pay that off in less than 6 months, most likely. There's good premium. If we go to November, yeah, we can go to the 260. So big upside from here, 33 delta, and collect 610. That brings the cost down to 33.28. We collect $600 every month, and yeah, we pay that off in less than 6 months. So hit review and send and place a trade. You know what? We didn't go through the, did I go through the numbers on this? Let's see. Okay, here we go. Salesforce, 1 year, 334 they've got as a target. We're at 243 right now. So they agree with me. And you can see the 52-week high, 369, just back, we were just back in January up at these highs. So for some reason, it's just down. Great buy. It's on sale. My girls and my wife love sales. And we can go to analysis page here, and boom, constant earning beats quarter after quarter, strong buy ratings, growth estimate, 12%, boom, every quarter, like printing money, guys. All right, guys, stocks don't just go up, and sometimes they come down, right? Well, IonQ, despite being a leader in quantum computing, is priced high relative to its current revenue and profitability. Growth expectations are factored aggressively into the price, making it vulnerable if progress or adoption slows. With rising competition and evolution risk, IonQ faces downside if sentiment shifts or broader tech sell-offs occur. And yeah, they well could. All right, guys, IonQ is one of the leading quantum computing stocks, so I like it. I like to trade it as well. But look where it is with the chart. This is the 1 year chart, and it's up at 60. It had a big move up, and it's at the top of the Bollinger Band. So at this point, I think there's a better chance it's going to fall down. So what I'm going to do is go ahead, and I'm going to go out to November, and I'm going to sell a call credit spread. So I'm going to bet that the stock goes down. And what I'll do is I'll go out to the 80 and 90. I like to collect a third the width of the strike. So let's see. If we go 75, 85, we can collect 243. Wow, 70. We got to go right at the money. 70, 80, collect $3. 67. Do I want to do that? 70. Do I think? Yeah, there's going to be a pullback. So I'll go ahead and do that. And we'll go out to November. Give us some time. And I'll put good till cancel. Monday, I'll put this on. And, just like, so we profit it can even move up a little. It can move up. Our break even is 72. It's basically the 70 minus or 70 plus the 305. So 73.05 is actually our break even. And we've got a 64% chance of it expiring below the 70 in 54 days. We're going to collect $300, $305 as soon as we hit review and send on this. Good till cancel. Boom. Boom. All right, the next one, IREN. IREN Limited. So I need to probably do a deep dive on this one. I'm trading it because of this. Look at that. Boom. Anytime there's a parabolic move up like this, it's not going to keep going. At some point, it's going to come down. And we're at 41 right now. So I need to do a deep dive. This is my watch list over here on the left. And that's how I came to be aware of this. Plus, it's a hot stock right now in the market. So, you know, again, I don't even know what they do. But if we go to research news and about IREN, I know it's good. I looked at it. So it's one that I saw something on it. But so they own and operate data centers powered by renewable energy. That's big. They optimize. Its facilities are optimized for so it's a Bitcoin mining company, also big. They utilize AI, cloud. Wow, all the trends and buzz terms. So it looks like NVIDIA H1 and H200 they're utilizing. So yeah, I need to do a deep dive. They're a great company, 257 employees. So growing like crazy, but look at that chart. My goodness. So I've already got a call credit spread on at 45. We're trading at 41 right now. And yeah, 154 bucks I just started trading this. It's the last 30 days. But I'm going to keep this with the call credit spreads because I don't want just all my positions long. If there's a pullback in the market, this is the type of stock that's going to have a huge, move down going forward. Let's look. I think their balance sheet, their financials are, I believe, good. Yeah, quarterly. Well, they haven't been around that long or public that long, but good balance sheet and income statement. I'm sure their profit margin, it doesn't even list their profit margin. They're so new, but okay. So call credit spread is what I'm doing. I'm going to go to November and I would do the same trade I've got on right now, 45.55, collect 247. I'd like to collect a third the width of the strike, but I've already got it on. So, check it out, put it on. Let's look at Yahoo, what they've got on this. But you can see they've got a 43 target. So we're right at that target price range that they've got on. And I'm sure they've got huge growth. If we go to analysis page, actually, I've got it right here. So they missed earnings the last couple of times, but no big deal. That's because they're such a huge growth new company. They're investing, I'm sure, in R&D, but they've got strong buys and buys. And I'm sure the growth is out of this world. Yeah, 48% next year, 168 this year. So I like it. This is a stock that I would typically be long on, except for the fact that the chart. All right. So I would put on what I'm doing. I've already got it on. You saw call credit spread right here, 45.55. I may put on another one Monday. Let me know if anything you know about this stock as well. Any thoughts? Let me know. Appreciate it. Share it with the community in the comments below. All right, guys. And the last one, I actually love this stock, so I hate to bet against it, but hey, it's too high priced right now. Tesla. I've got call credit spreads on in Tesla right now. The valuation is elevated and the forward PE is much higher than some others. So people pay for the robotaxi, the humanoid robot, and there's regulatory scrutiny and challenges around production targets. So any market correction or earnings miss could trigger a sharp pullback, and I'll show you the trades I've got on. All right, guys, here's the main reason I'm selling a call credit spread in Tesla right now is look at the 10-year chart going back here, 2019 at least. It's trading up here at 440 right now. So it's trending up. I love Tesla long term. They've got a lot of different ways to make money, but it's at the top end of that range, top end of the Bollinger Band. So stocks don't just go straight up. It's going to fall back down into this trend. So at some point, there's going to be a drop back to the 350 range, almost guaranteed, and I'll profit on the credit spreads. And I don't know when that's going to be, but I'll just keep rolling out and doing these credit spreads. I've got one right now, 460, 470 right here. So you can see we go to the trend mode or curve mode, and you can look here. So the profit, I profit all the way up to what, 462 range is my break even. We're at 440 right now. And again, we've had that big move up. So I'm looking for a pullback in Tesla. I like it long term, but it's just too high priced right now. So what I would do is I would go to the table mode, and I would go to November, and calls are on the left. So I would go out and sell maybe the, what do I have on right now? Oh, I'm still in October. Am I still? Yeah, I'm still in October because it's profitable until I'm tested. It hasn't been tested, but here's what I've got on in October, 460, 470. But if you put that on right now, you could still collect 295. My goodness, I might stay in October and just do that. In fact, I'm going to put another one on. I like that. If we can go, we can even collect a little bit more. 455, 465. There's my third. 455, 465 in October. I'm going to hit, I'm going to go good till cancel, put this on Monday morning. I'm going to throw another one on. So if I am tested and it moves up, then I'll just roll to November and I've got two on, because at some point it's going to, and then I can readjust if needed. But review and send and place that trade. Let me know if you're trading Tesla. All right, guys, let me know if you like in the comments below this setup, going through 3 stocks I like, 3 stocks that I think are undervalued, and 3 stocks that I think are overvalued, and the plays that I'm putting on right now. And if the ones that we covered today, if you've got others in mind, let me know and we can cover that next week. Every single week on the weekend, I try to do a video and set us up for the next week. And prices are always changing. So stocks are going up and down. And so we want to buy those undervalued and sell the ones that are overpriced right now. I only follow good stocks. So they're going to be stocks that we want to go for the long term, but sometimes they get overpriced. All right. Be sure and hit like and subscribe down below. Download the free options workshop. Check out the paid course to level up your game. And if you like this video, watch this next one.